Hello and welcome. It's Business Incorporated live on Channels Television. Yeah, it's all about Davos. There's a trading week right here in Lagos, Nigeria. Here's what's coming up on the show. Yeah, first we get an update as the World Economic Forum in Davos enters day 2. And we see the dollar hit a 2-week low as tariff threats stoke volatility. The price of copper drops and concerns record prices are hurting demand in China. Yeah, as I said before, yeah, it's day 2 at the World Economic Forum in Davos, and so many conversations happening today, and definitely joining us right now to discuss more. We have Mr. Wale Tinubu, the Group CEO of Rwanda, joining me right there from Davos via Zoom. It's great to have you on the show, sir.
Thank you.
Fantastic. I hope you're keeping warm, over there. I know it's really cold right there in Davos, but tell us what's played out so far, your experience right there in Davos.
Well, it's an interesting Davos this year. We have President Trump arriving, and he's going to address the conference tomorrow. And this is around his recent abduction of the president of Venezuela and his demand to have Greenland annexed. So it's an interesting period for the world because all of a sudden, it seems like the old world order as we knew it is now being replaced with a me-first order in which America is leading the chart by basically saying America first in all issues without recourse to international norms. So the question is how will this extend into Africa, into Nigeria, into business relationship or economic relationship, social security issues as well too.
And definitely you've been a player in the industry. What's the attention like? When it comes to, are we talking oil prices? We're seeing oil prices depressed at this time. And what kind of conversations are we having there? About attracting more investment into Nigeria's oil and gas industry.
Well, the oil community is well represented. We had the oil and gas dinner last night, and then we're having a full session tomorrow with all the group CEOs of all the large multinational and independent oil and gas companies. But I think there's a consensus of opinion that oil prices will dip, but not necessarily drop tremendously. We expect oil prices to be around the 60 mark, and that's because whilst the supply is steady, economic growth is high. The world is recovering from COVID, and there's been underinvestment the last couple of years. And global demand is probably growing by about 1 million barrels a year. And right now we're at about 103 million to 104 million barrels per day of consumption. And really the geopolitical crises we have between Ukraine, for example, and Russia, as well as what's going on in Venezuela, certainly creates fractures in the market, which is effectively restricting our markets to be regional as opposed to a full-scale global oil market. Since Russia is selling to selected markets, Venezuela is now being restricted by the US. And it's interesting times for us.
Are we seeing, conversations about, energy transition?
Yes, we are, but we are maintaining our position that the energy transition needs to be fair and just. Africa is a victim. We're only 3% of global emissions, even though we're 20% of the world's population. We suffer as well the direct impacts of global warming, as you've seen from the range of flooding that's gone on, which has never really happened in our history, but all of a sudden it's happening across the continent. We saw what happened in South Africa last year. We saw what happened even in Nigeria as well, to where we had rounds of flooding last year. And the issue really is that we need to continue to use what we have. We have abundance of hydrocarbons, gas and oil in the continent, and 45% of the continent doesn't have access to electricity. So our argument is quite clear that it has to be a fair transition. And at the end of the day, carbon credits need to be provided for Africa, and financing needs to be provided to us to ensure that we can invest in sustainable energy sources. But simultaneously, we must use our hydrocarbons, we must use our oil, we must export our oil. We need the income for the continent.
Conversations about, Venezuela and, most of the oil companies in the U.S. they're not showing that much, enthusiasm when it comes to investing in Venezuela. But, looking at Nigeria's oil and gas industry, do we have to convince international investors a lot, this time to show them that Nigeria is investable?
No, I mean, we don't have to convince them. Our oil industry is developed, and our oil industry has been supported tremendously by the public sector in recent times. The PIA has been passed, so we have certainty regarding our rules, our regulations, and our conduct of our engagement on fiscal terms. We've had a reorganization at NNPC in which you saw a professional board put in place with an excellent CEO who's leading the charge towards restructuring the company. We've seen a very active NUPRC doing bid rounds, encouraging people. We've seen the recent divestments with Shell to Renaissance, ENI/Egypt or Orlando PLC. So they know that Nigeria is an active oil and gas play, and there's been new FIDs announced in recent time. First time FIDs have been announced in the last 10 years. FIDs have been announced in Nigeria. So production is up. We're active. Security is put under control in the Niger Delta. We've had a substantial reduction in the number of incidents that are happening on the onshore. And so capital is flowing into Nigeria for the oil sector. We're very excited, and the new administration is doing a lot to ensure that our issues are dealt with. The president signed recently several executive orders that makes our lives very easy in terms of being able to award contracts and speed up the process of procurement to ensure that we can move quickly from FID into construction, development, and drilling operations in our industry.
Right, and what are you seeing for oil production in Nigeria in 2026?
I mean, we're around the 1.5 million barrels per day. I think that we can probably shift 2026. We probably should be able to add on a minimum of 500,000 barrels more. There are quite a few fields that are being reactivated. Renaissance is doing the same thing. Rwanda is very active. We expect to have a very aggressive rig drilling program. We expect to drill up to 100 wells over the next couple of years. And we've got one rig in, another rig arrives in February, and we're going to have 3 more rigs join us by the end of 2026. So we are looking forward to exciting times in which we would ensure that the billion barrels of reserves which we control, we improve the ratio between our reserve base and our production levels. So we are quite confident and happy with both the macroeconomic situation we face in our industry and the micro side of things. And we look forward to exciting times.
Fantastic. I'm also looking forward to exciting times. Thank you so much, Mr. Wale Tinubu, Group CEO, Orlando. Thank you for coming on the show today.
Thank you very much, and have a great day.
You too. All right, so right now, that's it from Davos. All right, let's get a check on the metals market. Now, let's see what's playing out there. We're definitely seeing, the metals market looking strong this week, even though, copper did, pull back earlier, but we're seeing copper back up 0.29%. Spot gold, yep, the rally continues, 3.11%. Spot silver, big 7.36%. We're seeing silver there, outperforming most of the metals that we track. 3.14%. That's for platinum, $2,380 per ounce. Palladium, that's up 2.92%, $1,874. So that's the picture right there for the metals market. Then we see, some other stories on the continent there. We see Equatorial Guinea, OPEC's smallest members, turn to commodity trading companies for repayment deals on oil and liquefied natural gas to help finance a revival of domestic hydrocarbon production. The Central African nation is looking for $300 million in return for deliveries of crude oil and LNG spread over multi-years, according to Bloomberg. We see the dollar now it's hit a 2-week low there, the lowest level in 2 weeks. The currency hedging costs climbed as President Donald Trump there. He's talked about, Greenland at this point. He really wants to buy, Greenland, and we're seeing the impact right there. The Bloomberg Dollar Spot Index slipped to its weakest level since January 6th. I was on track for its worst 2-day stretch in about a month. So that's a picture right there for the dollar. All right, let's get a quick check now on some other, commodities at this point. We're going to be talking about yogurt at this point. We've seen the price of yogurt. I'm sure there's some parfait fans out there. We've seen the price of yogurt. That's risen about 20%, according to data from Financial Derivatives Company. Joining me out to tell me what's playing out there, we have Amira. She's an analyst with Financial Derivatives Company. Hello, Amira.
Hi, good day, Laddie. Thank you for having me.
Yeah, good to have you, Amira. So talk to me, what's playing out there with the price of yogurt? There we're seeing the retail prices rising in January alone.
Okay, so thank you very much for the question. We've seen the prices of yogurts have risen year on year by about 20%, which is currently going at the price of 1,800 naira for 75 ml, 75 ml, and last year it was going at the rate of 1.5. So this is a 20% increase, and it's more of like that's raising the discussion on whether it's now tilted towards being a luxury good. But we have the cost push and structural factors making, which has revolved around the Nigeria's dairy value chain. So in terms of inputs, the inputs used in the provision of yogurt are largely imported, such that we have milk, we have sugar, we have even sweeteners, even down to the packaging or materials. They're largely imported. Notably, in Nigeria, Nigeria only produces about 600 to 700,000 thousand metric tons, and we demand for about 1.6 to 1.7 million metric tons. So this means that about 70% or 60% of our entire demand is met by imports. So we bear this cost. And sugar has also been trading high, which we've seen the values to have been fluctuating. So all of this makes the prices of yogurts be on the high side. Then when we now look at the storage and also the diesel prices, so we know that yogurt has, right from its production to the whole distribution process, even storage, we have to consume a lot of power into this, and we know that the cost of power remains elevated. So all of this cannot just be borne by the producers. They have to pass through this effect to the consumers in form of high prices. Then consumers have started tilting towards buying other substitutes that are cheaper, maybe like small parfaits, tiger nuts. We have Zobo, so which are more consumer friendly, like cheaper in terms of prices. Then it's now looking like a discretionary good, because even the average Nigerian consumer, you wouldn't see it in their consumer basket. You see goods like rice, beans, curry fill the basket. So instead of having yogurt, which is already costing so much high, and they cannot derive so much utility from that.
Right. I guess the consumer has to make a choice at this point. Thank you so much, Amira Yakubu, analyst, Financial Derivatives Company. Thank you. All right, let's get a quick check on the markets. Now, let's see what's playing out on the African continent. We see the NGX marginally down just about 2 basis points, 166,081 points right there. But it's in the red, just marginal. This could flip over before the close of trade today. Then for the South Africa index, we're seeing 120,000. Yeah, 120,000. Yeah, it's been rallying. This used to be about 90s level, before it crossed the 100,000. And so there we have it, 4 basis point drop there, but it's 120K for the Johannesburg Stock Exchange index. Then we check on EGX 30, that's up 1.79%. Kenya closed down, that's for Monday, about 0.014%, 193 points there. And for the Middle Eastern markets, we're seeing positive sentiments right there in the UAE. The Dubai index up 0.48%. Abu Dhabi, 10,177, about 7 basis points up. For the Saudi, that's a total 10,932 points, 0.14% up. Qatari index also up 0.19%. So we're seeing positive sentiments right there in the Middle Eastern markets that we track. Definitely we're seeing oil make some kind of recovery there. All right, let's get a check on the stock futures now. They pointed to a downbeat session today as President Donald Trump intensified, his rhetoric on Greenland, threatening to impose new tariffs on countries opposing the sale of the Danish territory to the United States. And so we're seeing risk assets struggling. All of this started on Monday, and we're seeing that continue in the Tuesday trading session. Let's get a check on Asian markets now. I would see it's also deep red there. The Nikkei, 1.11% drop to close, 52,991 points. The Hang Seng Index, 0.29% down, and still the same rhetoric there on what's playing out with Greenland. So other markets we track in the area, we're also seeing the Nifty 50 not able to snap the losses so far, 0.80% down, 25,357 points. So that's the picture right there with markets that we track in Asia and the US. But let's take it on to Europe now. Let's see what's playing out in Europe. We have Lars Holter with the details. Great to have you, Lars. How's it looking in Europe?
Yeah, good to be with you, Ladi. How you doing? We are down across the board, and with the losses that we are actually expecting on U.S. markets, because, Ladi, if I may, I think you had a technical glitch there on your wall because it showed the futures down 0.17. Futures in the U.S. are currently down actually 1.5%, so it looks like we're getting some really dramatic losses on Wall Street. And having that in mind, of course, we can't really assume that anything in Europe is looking any better today. Maybe even dragging into the next couple of days. It is obviously the Greenland crisis, and that is reflected in all the markets in Europe. But as you just said yourself, it's reflected in markets elsewhere too. And it's overshadowing everything, including some positive economic news, because we did actually get inflation data out in Germany that was better than expected. But that is really not much of a topic on a day like this.
Right, yeah, definitely. So much to talk about right now, but we have some data from the Anti-Poverty and Development Organization. That's Oxfam at this point. That data is out, an annual report on wealth inequality. And definitely we know we keep talking about the rich getting richer, the poor getting poorer. But what's this report saying?
Well, Ladi, it's not entirely surprising, but indeed wealth inequality is still on the rise. Like you say, not only is it a huge problem, but the gap between the rich and the poor is indeed growing once again, as it has actually been every single year going back decades. And the numbers are truly shocking. Oxfam says that the world's roughly 3,000 billionaires currently hold a combined fortune of $18.3 trillion, and that is up more than 80% over just 5 years ago. And looking at last year's growth rate alone, billionaire wealth grew by about 16%. And not only is that a lot more than average people's wealth growth, but it is also about 3 times faster than the average rate of growth in previous years. So like you're saying, Ladi, the rich are getting richer, but they're also getting richer faster. Meanwhile, according to Oxfam, of course, nearly half of the global population lives in poverty. And the most shocking line in the report, really summing it all up, the world's 12 richest individuals currently own more wealth than the poorest half of the global population, which is around 4 billion people.
So who are those at the very top of the list? That's the very richest.
Well, most of them, Lottie, are household names. Most of them are from the US. At the very top, of course, is Elon Musk, Tesla CEO and worth almost $350 billion. And he is a prime example for how things have truly been getting out of control. Musk, you might remember, was awarded a $139 billion pay package late last year. That's not even included in that number that he is currently in the books with. That would be additional. And Musk is also, of course, a prime example for how money buys influence. In his case, we just have to think back to last year when Elon Musk took over large parts of the US government, slashing costs in different departments, including social services and health programs, with, of course, no real mandate at all other than his close relations and financial donations to US President Trump. But moving on further down the list, the very richest also include these Silicon Valley bosses, Mark Zuckerberg, there's Jeff Bezos, Larry Ellison, there's Larry Page and Sergey Brin, each of them worth way north of $100 billion.
Yeah, I guess it's the same familiar names at this point. But what does Oxfam suggest should change in an effort to fight, wealth inequality?
Well, Adi, honestly, I don't think that at this point anyone at Oxfam or elsewhere is actually very optimistic that anything will change. But Oxfam has, of course, argued for higher wealth taxes for decades. Other than that, they're resorting to dark humor. Their report uses some bizarre equations even to illustrate just how far out of whack everything is. They're saying that, in fact, the 4 richest men in the world are currently worth more than all the cows on the planet would cost combined, obviously, with hunger still being a terrible threat to people's lives in many parts of the planet. Anyway, are we hopeful to see this change? Not really. And the World Economic Forum in Davos is the perfect illustration for that. This week, some of the richest people and many of the most powerful world leaders are meeting there, along, of course, with dozens of central bank chiefs and finance ministers. And Ladi, it's safe to assume that the well-connected will continue to benefit.
All right, definitely. We'll keep tracking. I guess the next Davos will get another report from Oxfam. Thank you so much for helping us unpack that. Thank you.
Thank you, Ladi.
All right, let's get a quick check on what's going on with other markets now. Definitely, we're seeing risk assets, suffering this week. And Bitcoin, Ethereum, most of the altcoins, they're still struggling this week. Bitcoin did pull back to about $91,000. We're seeing Ethereum also struggling there. Most of the altcoins under pressure right now, just like other, risk assets. Then we have some top news right there in the market. Coinbase CEO Brian Armstrong, he said he will use this week's World Economic Forum in Davos to keep pressure on U.S. lawmakers to pass a long-awaited crypto market structure bill. Comments came as Coinbase continues to lobby for, clearer rules on digital assets, even after the company pulled support from a revised Senate draft. Armstrong framed the trip as a working session with global leaders and major banking executives as Washington debates how to regulate stablecoins, tokenization, and decentralized finance. That's DeFi. Now, we see crypto securities holdings by Dutch companies, institutions, and households have skyrocketed in recent years. According to new figures from the Dutch Central Bank, together, all sectors in the Netherlands earned around 81 million euros in indirect crypto investments at the end of 2020. But by October 2025, this had risen to 1.2 billion euros. That's according to the bank in a new report. They would say a dormant Satoshi-era Bitcoin wallet came back to life after 13 years, transferring its entire 909.38 BTC balance worth $84.6 million at current prices into a fresh Bitcoin address. On-chain data from blockchain analytics firm Arkham Intelligence shows that the address first received Bitcoin and Bitcoin about $91,000 in 2013 when one coin was trading at less than $7. By comparison, if instead of buying 909.38 Bitcoins worth about $6,400 in 2013, the same amount had gone into a low-cost S&P 500 index fund, it would have been worth about $37,000 today after a gain of 481%. So those are top stories right there in the crypto market. And definitely we're still seeing, risk assets are still struggling right now. We'll see the midweek trade tomorrow. Maybe, stocks, crypto. Maybe they could have some kind of breather tomorrow. We'll see if that happens and snapping the losses this week. But it's the Davos trading week, and definitely we're tracking what's playing out with major markets at this point. Thank you for watching Business Incorporated. I'm Ladi Williams from the team right here at Channels HQ. Bye for now.